Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. And if you happen to be watching us on Tiger TV today, folks, we get a great new set, an HD set all around. You're going to see the charts are going to be much crisp, beyond belief. We're going to be bringing people in through Skype, some of the guests, and you're going to be able to see the guest and me charts. We do appreciate you growling and prowling with us out here. I do want to thank the whole crew at TFNN getting this HD set up and just making TFNN a better place to watch each and every day. Crisp charts, good education. Market-wise, let's take a look at it. S&Ps are flat. Gold contract flat at $1,185 an ounce. Silver down 19 cents at $16.20 an ounce. Platinum down 12 bucks at $1,200 even. Copper flat at $3.04 a pound. Late sweet crude $75.54 a barrel. Bonds, we have the 10-year down 6 ticks at 126.16, 30 off 11 ticks at 141.11. King dollar up 417 ticks at 88.01. The euro 74 at 124.51, and the yen is trading up 21 at 150. Our phone number is 877-948. Give us a call, folks. Well, what's going on, y'all? S&P, you're up 2.5 points. We're at 2042. We've been hanging up here 6 days now. Bottom line is that, you get the 2046 that can get tested, no doubt. SPY, you take a look at the SPY. What we have with the SPY is this. The SPY today has done, so we've done 51 million shares. You're at 204.46. The high in the SPY is 204.83. So we've hit 204.58. Haven't hit the high yet. Dow Industrials. Go take a look at the Dow Industrials. Also flat, up 20 bucks. The high in the Dow was generated last Thursday. That was 17,705. More than likely will get hit once again. Putting points into the Dow, you have United Healthcare. That is the leader out there. That's up $1.32. Intel is second with 28 cents. Cisco is up 22, and Merck is up 46. Taking it away, you got Procter & Gamble down 55. American Express is off 51. You got DuPont down 34, and Big Mac is down 38. NASDAQ Composite. We take a look at the composite. What we have with the composite is this. Flat market, down 13. Realistically flat market, though. We take a look at the 3 Qs, the NDX 100. Inside the NDX 100, also flat market. You get 17 million as you're trading up at these highs. Now it's all about the dollar index, folks. We're going to do the dollar before gold. So, dollar index out here today. Well, first off, let's go back to Friday. We've been at these same levels since the November 6th. And what we have had is this, is that higher dollar, higher market. Lower dollar, lower market. And it's immediate, too. Friday, what ended up happening is this. Friday, dollar got over its highs, closed underneath them, had lighter volume, did the test, failed. Today, what you have, we get into the lows that were generated on the 10th of November, rejecting lower price, have lighter volume. What does that say? It says, yep, that dollar can test the highs of Friday. Now, this is where we have divergence, however, and this is what it is. The dollar index is up 412 ticks. Gold, now we're going to go over to gold. With the dollar index up that high, gold is not getting whacked. So gold last juice to the top side. Gold, silver equities had the same deal. The XAU, the HUI, tested the 2008 lows, did it with lighter volume, rejected them. What you have here is that the divergence that we have, gold right now is at 1185. And once it got back inside, and this is going to get really interesting, it's really 1183. I'd like to see it actually get up to the 1208 level. But it's just tucking its head inside the next higher range. I suspect what we're doing here is we're building some cause to do a wide price spread accelerated volume to the top side once again. Now, that's in the gold market. When you take a look at the we go over to the SPY for a second, most times when the dollar was up so dramatically, the market should be up. So that's where the divergence lies out. And specifically, that divergence will get straightened out in the next few days, and it's either going to get straightened, S&P coming down, or the dollar going higher and the S&P going higher. Consistent thus far as to what the market wants to do. October, right now, that's a nice acceleration. Well, that's a normal acceleration as it's pushing into the swing point of 127. We hit 127. The last time we were up at 127, we did 946,000 contracts. We've done 910 today. We're going to do around the same amount. That's saying you what? That's saying you're building cars to get into higher price. The 30-year bond, we take a look at the 30-year, and the 30-year, folks, is what leads the 10-year. The 30-year has been leading it for quite a while. 30-year got to a high today of 142.09. We've done 248,000 contracts, which isn't bad because you're going into 209. So the 30-year is pushing into that level, has higher volume pushing into that level, has given it up on price, but when you have higher level, you're going to be right back up to those numbers. And if you want to see heads you win, tails you win, well, there's no doubt. The takeover battle for Allergen in a big way. What you had out here is that activists is going to take them over. They're going to pay $66 billion. And if you want to trade, this is an amazing trade. Because if you heard about this, Ackman got together with the Valiant CEO, and Ackman had owned 9.6%, I believe, of the equity, and he owned them through options. He had put $3.2 billion on the line. The bottom line, that $3.2 billion right now, not getting the company, is still worth $6 billion. And that was from April, let me see this, April 17th, April, May, June, July, August, September, October. Not bad. 6 months. 6 months. Big number. And out of that, I believe that Valiant can get 15% of the profits, which isn't bad either, because that turns around and pays some of their overhead. That, what, 15% is about $400 million, $3 billion, yeah, $400 million, $450 million. Not bad. Some of the high-volume stocks out here in a low-volume market, this is what we have happening. You have Baker Hughes. That's getting taken over by Halliburton. Baker Hughes is up $5.95. Halliburton's down $5.90. We get Bank of America off 4 cents. You have, let's see, Pfizer's down 5. Twitter's off $1.50. Gilead Sciences down 143. If we do go over to the IBB, so check this out. This is interesting. The IBB right now is set up for a nice ABC structure on the way down. Well, it's not an ABC structure, actually. What you have is this. The IBB is trading at 288. That wants to go test, though, this 257. It's setting up really nice. If we take a look at the IWM, as one of our targets is saying, that it seems weaker than the marketplace, and there's no doubt about it. The IWM, folks, is the weakest index in the major indices, meaning the SPYs, the diamonds, the Qs, in a huge way, too. The IBB, I mean, if we take a look at the Russell 2000, which is the correlation, which is the indice that the IWM is following, we got to 1188, and that was, it didn't even make the low of the high. The high is 1213. This is Tom O'Brien. This is TFNN. Our phone number is 877-927. Dow Industrials are up 13. Nasdaq's down 18. S&Ps are flat. You stay right there, folks. We're coming back with...
The Path of Least Resistance is David White's daily trading newsletter, Trading Ideas. Then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The diagnostic box helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TL to Daryl Martin's diagnostic box spread analyzer and gain when trading the Nadex box spreads.
Many of our new lists about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Sophisticated investors, such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 15, Nasdaq's down 18, S&P's are flat. Let's go to Kim in Denver, Colorado. Hey, Kim, how you been?
I'm fine, Tommy. How are you doing?
Okay, I'm doing great, man. Happy Thanksgiving. Make it a great one.
Yeah, I was trying to stay warm out here.
Is it cold? Yeah.
Yeah, it was freezing, but it's up about 20 degrees now.
20 degrees. Oh my God, that's cold for Denver, man. That vortex coming in is a big one, no doubt.
Yeah, this past week has been cold. Yeah.
Well, what are we going to look at today?
Bill Barrett Gas, BBG.
BBG.
What's going on with this stock?
Let's take a look. So it's an independent oil and gas company focused on natural gas exploration in the Rocky Mountains. The low is $11, the high is $29, and let's see what we got here. Okay, so they take in about $500 million a year. Stock,
is that a sign of strength coming back the last two?
Yeah, the stock is getting toasted.
I know.
Now, are you looking to buy this, Kim, or do you own it?
I don't own it, yeah.
Thank God.
I got several friends that work for Bill Barrett Gas, yeah.
Yeah, I wouldn't be touching it just yet. You know, what you have is this. Okay, so 2008 lows is $15.01. We did volume of 29 million there. You came down with 38 million last month, man, and we've already done 17. So that's saying that you're still going to do more volume. The stock's in trouble, man. Whatever is happening here, it's not good.
I know. You just took like 50% haircut now.
Yeah, and the way this is trading, let me just see something. So that's 44 million. Oh, you know, it broke a swing. It broke it with 38 million versus 44, so it's, you know, not the true definition of an ABC structure on the way down, man, but I wouldn't, you know, don't buy it, man. I mean, there's nothing underneath this. So what happens is that it has to get back on the northern side of $15.01.
Yep.
And it doesn't look like it wants to. So this, you know.
You have time to look at PBR?
Say it again?
Do you have time to look at PBR?
Yeah.
Petrobras?
Yeah, this one's interesting. So you got Petrobras, folks. And Petrobras, this is one of the largest oil companies, or it may be. It just depends on how much fraud's involved.
Yeah.
The low's $9, the high's $20. And they own, folks, okay, you're talking about marine terminals, lake terminals, thermal power plants, fertilizer plants. And there's been this huge scandal down in Brazil because of this whole deal. And it's like, okay, so where is this baby shaking? I wouldn't be buying this either because this broke under the 2008 lows. That was $14. And you get volume. So it's like, man, what is it, going to $3, $4? It's hard to believe that it can, but guess what? I mean, you know, it looks like there's a couple guys that are going to be going to jail, and who knows? So.
Yeah, there's some fraud, but a couple of CEOs have fraudulent numbers or whatever. Yeah.
Oh, no, it's huge. There's you know, this one here, I can tell you, is an absolute shocker, there's no doubt, because what you do have, but hey, that's what happens with fraud. I mean, what you do have there is that this is definitely, well, the world thought it was one of the biggest companies in the world. Well, it is. Look at this. Their gross revenue is $338 billion.
I know.
But guess what? There's something bad in paradise here. Don't touch it, man.
Every time I look, it keeps going down.
Don't touch it. Don't touch it.
Right. And same thing with Bill Barrett, right?
Yeah, right. Cooking, man.
Yeah, good to talk to you again.
Great hearing from you, Kim. Have a great one, man. Have a safe one. Let's go to Charlie in Woburn. Hey, Charlie, what's happening?
Hey, it's me.
I know, man. Happy Veterans Day. I didn't get to talk to you. How you been?
I haven't called in a while. I'm doing well. The collections business is great.
Yeah, too funny.
Well, you know, you listen to the talking heads. It's so, you know, it's a different world.
I love it. I love it, man.
Anyway, I'm looking at CGIX. It's down near you know, somewhat of a low, and I'm wondering, is it a good time to...
Let's take a look. So you got Cancer Genetics. It's a diagnostic company. The low's $6, the high's $20. Let's see what we got here. What is that? Okay, so... Okay. Okay, so what are we doing here? Let's take a look. What is
this? It's a recent IPO.
Yeah, it's a new IPO that's... I wouldn't be touching it just yet, Charlie. Man, these things are getting croaked. You know, so this just went from $23 down to $6. And it has to get back on the other side. You need some strength, and it's got to get back on the other side of 7 because there's no bottom. You know, that's just how it's set up. And they only take in $10 million. And they have a market cap of $60 million. And they lose $1.98. And they have, they lose a lot of money. Holy cow! They lose $1.68, but that means that they lose $700 million a year. They might even not have $700 million. I'd look at, don't buy this thing.
Okay, you got it.
Think about that, Charlie. Wouldn't we like to, folks? Think about this for a second. Wouldn't you love to send a company public? You only take in $10 million, you lose $700 million. And they give you a market cap of $60 million. How does that work? That's insane. Yeah, that's pretty intense, folks. And that may be right where we are right now. It's pretty intense, though, no doubt. Let's go over to the XAU, the HUI. So if you happen to be in the gold market, folks, the silver market, bottom line, what you have with the XAU, HUI, last week, what did they do? They rejected lower price of the 2008 lows on dramatically lighter volume. You get back inside the range. What does that do? You can't bust them down. You're going to bust them up. So the XAU right now is at 71.68. Your next level, once you get back inside 82, then you're going to get some real juice here. That's the XAU. HUI, we take a look at the Gold Bugs Index, the HUI. HUI is getting juice in it right now. In fact, this is kind of neat going into the close here, the kind of juice we get. Because when I started the program off, this dollar, folks, is crucial as to where this baby wants to go. The HUI is at 171.74. That had rejected the 150.27 area, had lighter volume, got the sign of strength, and now what we do have, what it actually looks like here coming into the close. It's going to be interesting watching this shake out because the divergence inside the dollar and gold is crucial to really wrap your head around it. And what has happened here in the past, let me just see this. It looks like we get some buying coming into the close. Not that much. GG. See, the equities themselves. The equities themselves are getting stronger. But if you start seeing buying coming into the close out here in the gold equities or the silver equities, what you're going to see here is that dollar, someone's going to sell into that dollar once again. And the dollar's a close call, folks, because it is up 407 ticks, and that's after being down. So watch if you want to take a look at the spread, DXZ4. Last Friday, the spread in the dollar was 900 ticks. What we have today is that we have, let's see, 23 to, it's 800, it's 770 ticks. It's pretty good, you know, from high to low. So that's saying that the dollar can go test that high of Friday once again. This is Tom O'Brien, this is TFNN. Dow Industrials are up 17, Nasdaq's down 18, S&P's are flat. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Dow Industrials right now up 17. Nasdaq's down 17. The S&Ps themselves are absolutely flat. Some of the Dow stocks out here, this is what we have with some of the Dow stocks. You have American Express down 50 cents. Boeing is off 35. You get Oxy down 88. Big Blue is flat. Honeywell's down 31. Walmart is up 64. If we go over to Walmart, WMT, Walmart had broken topside last week in a big way. Wide price spread, accelerated volume, no doubt. That was on the 13th. And it took off, and it took off in spades. Let's get to Marty in Worcester. Hey, Marty, what's going on?
Hi, Tom. Hope you're doing well. Hope you are well.
I thank you so much, and you also.
Thank you. You know, I don't have a special request to look at anything today. I mean, I'm watching the tug-of-war between the dollar and gold and oil and everything else. And
yes.
Kind of waiting for some more clues. But you know how you always say they're raising the prices and there's nobody in the store?
Yes.
Well, I can't help thinking of that. One of the busiest stores in my city right now, you can't find a place to park, and the aisles are full of people, is the Goodwill.
Interesting. Okay.
And it's been like that. I mean, I thought maybe it's just Halloween costumes. No.
Yeah.
They're busy. People are buying things there that they normally would buy at Walmart or at other places.
You know, people might be getting smarter, too, though, Marty. You know what I mean? It's interesting what you're saying, because they absolutely just may be getting smarter. So check this out. This is wild. Over the past weekend, right? Yeah. I was hunting in some of these, these what do you call those consignment stores, and I was looking at them, and I'm saying to myself, people have got rid of a lot of stuff that they don't need, and there's nice stuff. Yeah. So, you know, I understand what you're saying, but it's also, I think, after the downdraft in 07 and 08, probably everyone's got a lot smarter, too, you know?
Yeah, well, they're a lot more careful, if not a lot more poor, because I mean, I notice the only other stores that are really busy sometimes are the lower cut price grocery stores. Everybody else, there's plenty of room in the aisles. There's extra help around to ask questions of. But except for the low-price grocery stores and the Goodwill.
Yeah, I think what we're going to have here, and this is where I think the hard thing is going to be out, meaning that are we in an inflationary era right now? I can tell you this is what has happened in Florida, right? In Florida, well, this probably happened in the whole country. Food prices have been going up. There's no, there's no doubt. Food prices have gone up. Meat has gone up, right?
Yeah.
But something just happened, like within the last, I'd say 2 or 3 months, that the amount of cash that's got unleashed that I've seen in Florida is extensive. Now, that happens almost, well, when the snowbirds come down, that's what happens, okay? Yeah. But this year, I can tell you that this is really early for the snowbirds, number one, but there's a mountain of cash that's getting unleashed. So even with my own stands thinking that the market's going to pull back all weekend long, I'm saying to myself, this is a trip, man, because I can see the amount of cash that is getting spent. You know, but it's getting spent smarter. So
well, I understand that too, but what I'm thinking is that the top 10%, you're absolutely right. They're rolling in dough right now, but the other people, the rest of people whose wages have been going down in buying power for years,
yes,
it's different. You know.
No, I agree. No, listen, it's when I look at whether, as a kid, 10, 20 years ago, whatever, well, or as a kid a long time before that, there's no doubt that we made a lot less money, but that a lot less money went a lot further because of the fact that, we could buy, well, just picture, you could buy a triple-decker house in South Boston for $14,000. I went back there a couple of weeks ago, and that house is $500,000 now.
Right. Oh, yeah.
So.
Oh, yeah. Yeah, I mean, until people are back to work and making good wages, you don't have the demand for the products.
Yeah. Well, you got, I mean, your economy up in Boston, man, is flying, I mean, every you can't even buy a closet for less than, what, $500,000. So it's like, I don't even know how they afford it. I'm not kidding. My daughter just bought a house, and I'm looking, I'm saying to myself, how the heck do you even do it? But guess what? That's what everything is, right?
Well, they're living in their parents' basements more and more, too.
Yeah, I don't know. It seems like they're coming out of their parents' basements now.
Well, I hope you're right.
Yeah. Cooking, brother.
Okay.
Have a great one. Great talking to you. Happy Thanksgiving, Marty.
You too, sir.
Thanks, man.
Bye.
Let's go to Salim in San Jose. Salim, how you doing?
Hey, Tom, how are you doing?
I'm pronouncing the name wrong. Tell me your name.
Sunil.
Say that again?
Sunil.
Salim. Oh, good. I was right. Okay, cool, man. Okay, you're going to look at ANV?
Yes.
Let's take a look. We got Allied Nevada. This is a gold company that does business in Nevada, Bolivia, Mexico, Indonesia. The low is 85 cents. The high is 670. Okay, so finally get to, this is looking good today. Interesting. Okay, now you own this, you're looking to buy it?
No, I'm looking to buy it. I've been watching it for the last 1 week or so,
Yeah.
And I see a lot of strength in the last few days. So I was wondering.
It's impressive what's happening out here today. I'm trying to figure this out for a second. Here, 1 second, because what you have this a couple different things happen here. The downdraft, all these gold stocks got killed, folks. There's no doubt about that. The downdraft on this one was pretty dramatic, and it's like, okay, so, but they take in a huge amount of bread. I mean, it's a dollar stock, and they take in $328 million. I like the follow through out here today, I can tell you that. If you're going to buy it, just put I'd put a stop under 102. You're dealing with 167. You don't have to go to the bottom, because it shouldn't go to the bottom again. If you're buying any of these right now, this one's off the bottom, and it should, because if it goes to the bottom again, there's trouble. You don't have to put a stop underneath that, man. Do you know what I mean? But hell, I know it's 1 second. Let's do it this way. See, what's happening out here, folks, also, is all the 13 Fs are out here. Someone might have come into this, and they're looking at it. Okay, Van Eck came in, but that's normal, because that's an ETF structure. Bank of New York sold everything out. That's pretty cool. Hey, so check this out. Ooh, I like this. So Bank of New York dumped 10 million shares. Oh, they threw this up. This is interesting. So they threw this up on the 31st of October. That's good. 1 second. So who else came into it? It doesn't look like anyone big came into it, but I can see, if you happen to be watching Tiger TV, what you're looking at right there is that when someone owns more than 5%, folks, okay, they have to file not every day, but if they sell a certain percentage, and Bank of New York did, and they threw everything up, 10 million shares on the 31st of October. Let me just go look at this again. So, 31st of October, look at it right there. So they sold out at 133. Stock ended up going down to 87 cents, but yeah, I'd stay. You know, you can put a stop underneath it. Where I'm going is I'm giving you the November 4th, the stop under November 4th. The reason being is that we jumped above November 4th now, and that November 4th had 10.2 million shares, so it should be hard to get back inside the $1.40, and you're at $1.67. And I'm saying to put the stop, though, on the other side of that, you know, and you're gunning for, if you got one more day of strength, then you'd be gunning for 396, you know.
Okay.
So that's the way I'd set this up. And my take is that, you know, it looks to me like we get a pretty good bottom in the gold equities and the silver equities. That's how it's set up.
Do you think that this will go over 2?
Oh, yeah. You kidding? Yeah. 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 Over 2? This is what ends up happening. Over 2, okay, see, percentage-wise, that seems like a lot, folks, okay? But you got to understand something. These $1, $2, $5 stocks, they move 15, 20% in a heartbeat. That's not, you got to separate the issue of percentage moves in smaller stocks like this. These gold stocks, they're going to move 30, 35% in a heartbeat. Now they can give back 35% after that. But the fact of the matter is when they move, you know, that's how they're going to move. I mean, this is already up. If we were talking about percentages, it's already up what? It's already up 100% in the last 6 days.
Right.
Yeah. No, that's just how they move, man. You know.
Can you look at another one, the IM Gold?
Oh, don't touch that. Do not touch IAG, okay? You know, I can see it had the sign of strength Friday, okay? Don't touch this stock. This will here. So watch this, folks. And this is, I don't know what's wrong with this stock, okay? But this stock has a lot more work to do. And I do not like how this stock hit the 2008 lows. Okay, so watch this. 2008 lows, we did 45 million shares. We come down there, man, with 197 million. It's like, okay, you know, what you'd want with the IAG is you'd want an additional sign of strength, then you could buy the pullback. Not yet, though. I'd take one more sign of strength. So that would mean IAG would go up to about 257. And then if you pull back, and you pull back with light of arm, then you can take the shot on it.
Okay.
Okay, man. Have a great one. Have a safe one.
Thanks.
Stay right there, folks. Come right back. Dow up 18, Nasdaq down 17, S&P's are flat.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is up 14. Nasdaq's down 17. LinkedIn, LNKD, what you have with LinkedIn, she's down $10, trading out at 223 right now. And what you're going to see there is that LinkedIn's going after the gap. This had gapped higher on earnings on the October 30th, and it had gapped up from 203, opened the following day at 232. Gets to a high of 238, then comes off that high with expanded volume. You make the high out there with 2.4 million, you come down with 3.7. What we're doing now is it's got to 219 today. It's at 223. You do have an expansion of volume. That gap's going to get filled. That gap is quite a way down, too, from where we are. It's down $10, but the gap is an additional $20 on the way down. We take a look at this, and we put this on a monthly basis. Excuse me, folks. And what you're going to see on a monthly basis, what stopped it in its tracks was the downdraft that had been created going all the way back in 2013. So it made a high September of 2013. That high was at 257. Comes off that high, huge volume, 84 million shares on the monthly. We went into that high with 34 million, and then we try to get above it again with 42. So your correlation is 42 into 84. Not enough volume. Now what you have, expansion of volume on the way down. What does that set up? That sets up that it's going to go after the May swing point. That May, well, actually April swing point first. April swing point is at 190. We'll see what kind of volume you get as you get down there, but that's the setup right now on LinkedIn. And what the news is on LinkedIn, the reason that the fundamental news that it was getting hit was that Facebook was testing a workplace collaboration tool, and the market was looking at, okay, are they going to get hit? Bottom line is that Facebook's down 67 cents. Facebook's trading out at 74.21, and Facebook has its own problems. Facebook has already come off its highs with volume. High generated in Facebook was 81. That was on the 28th of October. It comes off that high. It does the high at 74 million, comes off the high with 106 million. You're building cars right now to get into lower price, and I suspect that lower price that we're going after in Facebook is going to be somewhere down about the 65 level. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom, raining like you can't believe.
Oh, you know, we have a storm here that's pretty incredible, too. So this is quite a cold front that's coming in, evidently.
Yeah, it's 4 o'clock and it's 41 degrees. What do you got down there, 80?
Yeah, we do have 70. Well, we probably do have 80, I guess. But we're going to be a cold front. It's going to be 70 tonight.
I'm sorry, I don't feel bad for
I know, we're little babies. I know, man. I'm telling you, man. I turned into, since I left Boston, I've turned into such a wimp, a weather wimp. It's disgusting, man. It really is.
I'm trying to get my fiance to move to Florida, so.
I'm telling you, do it, man. Do it. So, Intel. You already shot Intel, I think, right? So, what do you got? Are you in the option market with Intel? What are we doing here?
Yeah, no, I'm just shorting. Yeah, shorting it, but I couldn't remember where you said to put my stop.
Yeah, you don't let this get over 34.43. Because that just means that, hey, it can blast up. You know what I mean? I mean, it should. The reality is that, yeah, well, my reality is it wants to go to 31, but if you get over that, and where I'm going with that, all I'm doing is I'm taking the high. Well, you can take the 31. Well, yeah, you're gonna have to take the 34.78. So. Because if it gets over that, it can just jump everything and open up at 36 or something. Do you know what I'm saying?
Oh, boy, okay. Yeah, another quick question I had. Last week I asked you about Tesla.
Yeah.
And you said don't touch it because the short position was like 25% or something.
Yes. That means one... go ahead.
Go ahead.
That means 1 out of every 4 shares have to get bought back.
Oh, how do you find that? How do you see?
You can go to Yahoo Finance. They have it. Just Yahoo Finance. Let me see. One of the Tigers will give me a hand here in the den too. NASDAQ too. You can go to the NASDAQ too. NASDAQ, John. They'll have it right there. They update it every day, I believe. So, and that's important to understand because what happens is this: is that the amount of short positions in Tesla has been dramatic for a long period of time. But what does happen, of course, is 1 out of every 4 shares have to get bought back, and that holds the stock up, I mean, until it doesn't. And eventually it doesn't. But you don't want to be in the middle of those because you can see that, in Tesla, it just went from, 230 to 254,
Yeah, till the gap at 250, I think it was.
Yeah. And if you're going to, that's what it comes down to. Yeah, NASDAQ quotes, there it is. Okay, so if you go to the NASDAQ, what you're going to see is that NASDAQ.com/quotes/short interest.aspx. If you just go to the NASDAQ site, it's going to be right there. Someone just put it up in the den for us, though.
It's NASDAQ.com?
Yes. NASDAQ, okay?
Thank you very much.
Okay, man. Have a great one. Stay warm.
Appreciate it.
And stay safe up there. If you get a big rainstorm up there, folks, make sure you stay safe. The IWM, folks, in the correlation of marketplace out here, yeah, is the weakest market out here. So the IWM, we have a small gap at 115.38. That's what it's making a run for right now. We'll see how it hits it. You know, thus far, we have 23 million shares. We're going down right now, and it's the 115.38. We'll see how we do hit that level. If you happen to be watching Tiger TV, what you're seeing out here today is we got a new setup. We got an old HD TV setup, folks. And if you haven't watched Tiger TV, just remember that we do 10 hours of live programming every day. We go 24 hours a day, of course. You can get that Tiger TV. Just go to TFNN.com, and it's on your cell phone or your computer. On the right-hand corner, top, you're going to see Tiger TV. You hit that, you're going to see a beautiful HD picture with the charts, nice and crisp, all of the above. And we do appreciate all you tigers and tigresses growling and prowling out here with us, because there's no doubt that we couldn't grow like this without our audience, and it's a beautiful thing. The gold out here, folks, thus far what it's done is that it's rejected lower price out here today. Volume is not bad. Right now we're up 80 cents, but you're up 80 cents, and that doesn't sound like a lot, and it's not. But it is a lot in the context that the dollar index is up 407 ticks. I expect what you're going to see out here is that the dollar index basically has reached its high. We'll see whether it's going to test that high once again. My take at this particular point is that more than likely we're going to see tomorrow, we're going to see a lower dollar. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. And of course, next hour, we got Tigress Amy Smith from IBD. We got Chad from TD Ameritrade, Think or Swim. Dow Industrials right now are up 14. NASDAQ's down 18. S&P's are flat. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is The Author is Unknown. To start a better life, a better world, or a better future is to simply believe that it is possible. Market-wise, let's take a look at it out here. We had the Dow Industrials up 13, NASDAQ down 17, S&P's up $1. Gold contract up 60 cents, traded at $1,186 an ounce. Silver down 16 cents at $16.14 an ounce. Platinum down 12 at $1,201 an ounce. Copper flat at $3.03 a pound. Light sweet crude down 32 cents at $75.47 a barrel. Bonds, we had the 10-year down 6 ticks at 126.15. 30-year off 10 at 141.12. King dollar up 407 ticks at 88 even. The euro down 73 at 124, and the yen up 17 at 116.46. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You're at 2040. You get volume out here of 680 million versus 700. You get a sideways move. We get no juice. We're at the same place we've been for 5 or 6 days now. Dow Industrials, same setup in the Dow Industrials. Dow Industrials are up $20, $13. Same setup. The high that was generated last week was the 705 number. We've made it to 675 today. More than likely, you'll probably see that baby get whacked again. NASDAQ Composite, same setup in the composite. Sideways move in the composite. We're down 17, but realistically, that's a sideways move. Volume out here in the composite was 1.6 versus 1.7. Now, if we go over to the ETF structures, what you have on the SPY, we did 65 million shares out here, and that's going into 90 million, and 90 million in itself was light volume. The Qs, the NDX 100, what do you have with the NDX 100? The NDX 100 did 22 million shares out here, and that is about as anemic as you get. Even the first highs that were generated, the last highs in September, folks, it was banging out about 36 million. Now this week we're banging out about 28 to 22 million. So the higher the Qs are going, less volume by a dramatic amount, not a small amount. Now, small caps. What do you have with the small caps? Small caps are the only indice that haven't made it to its highs. If we take a look at the IWM, the high that was generated was 118.25 last week. The high that it was going after was the 120.97. So if you are looking for the weakest indice out here, when you're looking at the SPYs, the diamonds, the S&P, it's the Russell 2000. That is the weakest indice out here. Gold contract. What do we have with gold? Gold out here, folks. We had the wide price spread, accelerated volume last Friday. You do a sideways move out here today. We did 189,000 contracts. And that's a good number, by the way, the 189,000 contracts moving after the type of energy that we had in the market on Friday. Friday, we did 294,000 contracts. Good number. Big number. Silver. Let's go take a look at the silver market. Now, silver's going to need more force. Silver did have a good day on Friday. It had the wide price spread. Silver's going to still need more, though. Silver, we did 56,000 contracts out here today. Friday, they had the juice on Friday. We did 82,000 contracts. I'd like to see silver get another expansion, wide price spread, accelerated volume. King dollar. Now, King dollar is the number, folks. What is it the number all about? Well, King dollar on Friday had a higher high, gave it up on volume, had a spread of 900 ticks on the way down, well, from the highs to the lows. Well, it has an 800, 700 ticks out here today from the lows to the highs. That's saying that King dollar number one can go test its high again, which is the 88.36. And, you know, we'll see if, in fact, it fails or it takes that high out. My take is that it's going to fail. Why? Because gold had such an extraordinary day, but it wasn't just gold. It was the XAU, the HUI. They did their job. They got to lower lows. They got to the high volume lows in the 2008 level. They rejected them. They had dramatically lighter volume, especially the HUI. Then they went topside. Bonds. The ever-ready bond market still wants higher price. Bonds today, they pulled back slightly after being higher. The 10-year was at 127. We did 933,000 contracts. 30-year, which is leading the 10-year, that 30-year did 255,000 contracts, and she's down 10 ticks. Bottom line is that they want higher price. After the, let's see, so if we go take a look at the high-volume stocks in a low-volume market out here, this is what you had. Baker Hughes, Halliburton's taken over Baker Hughes. Halliburton is down 5. Baker Hughes was up 5. The big number out here today, the big winner out here today is the Bill Ackman. He had the bet that Valiant was going to take over Allergen. Bottom line is that different companies going to take it over, but Ackman basically made $2.5 billion even when he lost the race to get the Valiant to take over Allergen. Why? Because what the bet was, he had $3.2 billion in options that turned into $6 billion in options. So bottom line, big number. URBN. Let's go take a look at Urban Outfitters. Urban Outfitters is a big retail store. That closed at $30.83. That is trading at $29 right now. And let's see what the numbers say out here. Okay, so sales were down 1%. Their revenue, the estimated revenue was $812 million. They took in $814. So bottom line, didn't make their numbers. Not that they didn't get killed, but bottom line, didn't make their numbers. This is an equity that is down from $40. It's trading at $30 right now. It has a high volume low that it's going to go after at $29.11. And you break that high volume low and it's big trouble. It seems to me, you know, I was out shopping this weekend, and it seems to me these stores were mobbed, folks. You know, so it's really going to be, there's going to be winners and losers in this whole deal, evidently. And we'll find out where those numbers come out, but there were a lot of people shopping. There was a lot. It seemed that there was a lot of discretionary income that was out there that was getting spent. The retailers in general, though, Walmart is up, Macy's is up, but many of those retailers are down. So there's going to be some big winners and big losers out there. Big Blue. Let's go take a look at Big Blue IBM. What do you have with Big Blue? That is still building cars to lower price. Big Blue is going to be a shocker. We're at 164. Big Blue is building cars to not only get to lower price, but it looks to me like we're talking dramatically lower price. When she broke a high-end consolidation, and she just took it apart. And of course of 1 week, she took about 3 years. Right now, because she come off that high, monster volume coming off that high. And the next stop, you're 164. The next stop is 129. That is a big number when you're talking about on the way down. Zillow. We go take a look at Zillow. What we have with Zillow out here today. Zillow is up $4.15. And let's see. The numbers come out Friday on Zillow. I'm not quite sure what's happening here. So Zillow, she comes off the low at volume. She has high volume out here today. And if we bring this back on a monthly basis, Zillow, 2012, it's at $23. It screams up to $164, pulls back to $98. Zillow has a high volume high. You get a high volume high at $164. It's going to be interesting watching this whole thing shake out. This one's a classic. You had a pullback with lighter volume, even on the monthly. So watch this on the monthly. It was going into 50 million shares and came down with 31 million. Then rejected with lower volume, so we're going to have 30. The rejections probably be about 30 million versus 50, and it's going to go after this 164 again. And right now you're at 117. It's going to be interesting watching that whole baby shake out. Some of the Dow stocks out here. Well, actually, let's go to the oil market. CLF. So oil, we got cold front coming in all across the country. CRB. And oil itself just can't get out of this 75 area. What we have right now, oil's trading at 75.52, and that little baby wants to get down to 70 bucks. There's some real divergence out here, and oil just looks like it wants to go a lot lower. Same with unleaded gas, same with heating oil. This is Tom O'Brien, this is TFNN. Dow Industrial's up 13, Nasdaq down 17, S&Ps are flat. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 13, Nasdaq down 17, S&P's up $1.50. And as we do each and every Monday at 20 past the second hour, we have our Tigress, Amy Smith from Investor Business Daily. And folks, if you haven't test drove either the digital edition at investors.com or the print edition, Investor Business Daily, you can do that right now. 2 weeks, absolutely free. The way you do it, come over to our website at TFNN. You're going to see the banner on the side. Hit that banner. You can take your choice. You can do 2 weeks at investors.com or 2 weeks Investor Business Daily. That paper will get delivered to you each and every day. Amy Smith, what's going on?
Hey, Tom. I'm great. How are you doing?
I'm doing good.
Good.
Hey, so,
excellent.
Have you been shopping lately?
After we talked last week about Alibaba and all that shopping, I have not. I'm late this year. I need to get going. Did you go shop?
Oh, man. We were shopping all weekend.
Wow.
And you should have, the stores were mobbed. You know what's blowing my mind here? I'm trying to figure this out. All these retailers, a lot of these retailers actually got killed, stock-wise. But the stores are mobbed. Everyone's spending money. It's like, I'm trying to figure this out. I'm saying to myself, okay, where's this going to shake out? Is it going to be big winners or big losers or what? You know what I mean? So it's going to be intriguing watching this come in, but...
I totally agree with you. You know, it's funny. We went out to the movies, too, and the theater is in Century City, which also happens to be, it's like an outdoor mall.
Sure.
And we could not find any underground parking. We could not find a place to park. It was packed, and it was Sunday afternoon. So, people were shopping. The Bloomingdale's had a sale. There was a bunch of people coming out of there. Macy's was having a sale. There's people coming out of there. So you're right. People are out. The other thing that we noticed is that all these little casual restaurants, there was a BJ's, there's some other ones.
Okay.
Full.
I was at BJ's this weekend.
Yeah, they were full. There were like families, and there were singles, and there were young people. So, we've seen people out to eat, definitely spending some money.
Yeah. So, did you see Dumber and Dumber 2?
No. I saw The Gone Girl.
The Gone Girl, okay.
The Gone Girl. She disappears. She's a wife, and you don't know what happened to her.
Really?
Yes, they have to find out what happened to her.
Oh, my God. Okay, what are we looking at here? Talk to me.
It's funny. We could call this, you remember those little inchworms? Like they move along really slowly. It feels like the market is the inch by inch worm.
Yeah, that's the truth. I know.
The indexes, the NASDAQ, they're holding up. The S&P's holding up. One thing I've noted, though, a little tricky to make money in this particular market. The stocks, at least growth stocks, some of the ones that we saw move. So we had October the 21st, came off the bottom.
Yes.
You know, we're looking real strong. And then we had like about a 2-week period of time where a lot of stocks popped. Okay, and then we said, all right, they're looking good. And we saw breadths in the market. We saw a lot of different industry groups. And it's almost like, did someone give them a sleeping pill or something? Because everything's just kind of like there's not a whole lot of conviction from the pros pushing those stock prices higher.
Yeah, no doubt. You know, what's going to be interesting is that, you know, we have this sideways market, and I guess DreamWorks is, you know, basically getting taken apart somewhat here. Do you know what I mean?
It is. It's funny. You know, DreamWorks, you're right. They, you know, last week it was hot, hot, hot because they thought they were going to make a deal with Hasbro, and Hasbro has the little army men and all that cool stuff. So they thought, wow, this deal with DreamWorks and Hasbro could be exciting. But I think some egos got in the way. Apparently, you know, who's going to be in charge?
Okay.
You have like Jeffrey Katzenberg, and you've got some other guys, I'm sure, from Hasbro. So the deal cooled. I think probably some egos, according to many reports.
Okay.
That's what happened. That's what got in the way. So now what was up? You know, DreamWorks was up 14% last week, and it dropped 14% today. So
pretty intense. Now, this is something that normally is not in the IBD, but good old Walmart is acting like an IBD 50 stock.
Yeah, this is hilarious. I'm looking at this. I'm thinking, well, it's really moved higher.
I know.
They reported very surprising third-quarter results. Analysts were not expecting that at all. So even though it's not a traditional growth stock, we looked at it. It was higher today. Did you take a look at it? The ticker's WMT.
I know. Amazing. So let's talk. You know, this is going to get interesting here, folks, okay? So Mobileye.
Yes.
Let's talk Mobileye. All right.
Well, this one was, you know, this was a high-flying IPO. It came at a little base, went up 41%, and then it started to slop around and chop around with the regular market. Now, this is kind of one that has that big stock potential, but we don't know. Let's see how they do with their earnings. They have this collision avoidance software, and it's in the car that I drive. They're in BMWs, Nissan, General Motors, Honda, Volvo, Ford.
Okay.
Supposedly they're going to be in 160 car models by 18 different car makers around the world by the year's end, and then in 237 car models in 2016.
I see.
You know, there's about 100 million new cars made each year, and Mobileye sees a huge potential for that. So I like it. My car beeps. It goes deet, 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 deet. You know, if you're over the edge of a line, or if there's a pedestrian in the way, or if it sees a dog, or you know, anything that you might be running into.
No, it's good. I know what you're just saying. I'm so intrigued about, you know, I've seen these IBD stocks do this many times, and that's why I kind of brought it up. I says, okay, is this going to be one of these? You know, you make some nice highs, you go sideways for a year or two, and then all of a sudden it just takes over again. Do you know what I mean?
I know.
Yeah. So.
And it, you know, one thing that ran into it, and I'm looking at the chart right now. So you come out of this little IPO base, you run up 41%.
Yeah.
And then you pull back, and then the overall market pulled back. And typically, as you know, the IPOs are more volatile. So if the overall market pulled back, when we had that 10% correction, Mobileye came right down. And then it found a bottom, and then it's been kind of trying to just, solidify. So it really will be all about what their earnings numbers are on Thursday. So that's when everyone should watch. The ticker symbol is MBLY.
So here, I want to shift gears. You interviewed our man, Mr. Ken Shreve, huh?
Yeah, Mr. Ken Shreve, and he said so many nice things about you. He said you're one of the hardest working guys in the business, and it was a pleasure getting to know you. And he said, you know, nobody works harder than you. So I wanted to tell you, he said all kinds of nice stuff.
Oh, tell him it's a beautiful thing. We have a big love fest. TFNN and Investor Business Daily. It's a beautiful thing.
You know, it's kind of interesting. He's been, you know, of course, he left and he worked with you for a while, worked with Kramer for a while. But I think overall here at IBD, I want to say back and forth, because he's back here now, I think 14, 15 years, something like that.
Oh, I know, yeah.
So one thing that he said, you know, if I said, so what have you learned the most from all the years working with IBD chairman and founder Bill O'Neill?
Yes.
And he said, you know, it's that N in CanSlim. What is the new innovative product?
Yeah.
What is everybody shopping for? What does everybody want? what's in big demand, and I agree with him. That's the thing that makes this investing thing kind of cool. What's the next Tesla? What's the next restaurant, or what's the next gadget that everybody wants?
Yeah, there's no doubt. There's no doubt. In fact, I had a guy on last week. Now this was a trip. Dan Zanger. And
yeah, I like Dan Zanger. He's great.
And he was talking Bill up. I mean, it was blowing my mind, man. And this is a guy, folks. He exclaims it's audited, bringing in $11,000 to $42 million. It's like, really? It's like, that was pretty intense, man.
You know what's interesting about a lot of the guys, and I respect Dan Zanger a whole lot. I really do. They all sort of studied Bill's methodology.
Oh yeah, big time. No,
and they've kind of deviated a little bit from it, but everyone really has always learned a lot from Bill.
Yeah. Oh, there's no doubt. There's no doubt. Listen, folks, come over to our website at TFNN, hitinvestors.com. You can take your choice. 2 weeks internet, 2 weeks paper. Amy, have a great week, safe week. Look for you speaking here next Monday.
We'll see you next Monday.
Okay, great. Come right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 13, Nasdaq down 17, S&P's up $1.50. And as we do each and every Monday at 35 past the second hour, we have our man Chad Coco from TD Ameritrade Think or Swim. Chad, folks, has the best option show on the planet. It's right here every Tuesday, 12 to 1 Eastern Standard Time. And don't forget, folks, at TFNN, you can get all the programming right on your cell phone, TFNN.MOBI. If you'd like to get Tiger TV, folks, you just go TFNN.com. And on the right-hand side, on the top right-hand side, you'll see Tiger TV. You can hit that, and if you happen to be watching Tiger TV and have been watching, you're going to see that we have a brand-new set today. Everything is high-quality HD. I do want to thank my whole team here at TFNN. They did an outstanding job. You're going to see the charts are much cleaner. They're crisp. It's about as good as bleeding technology as you can get. Chad Coco, what's going on?
How's it going?
It's going great, man. Hey, listen, your show tomorrow is going to be an HD extraordinaire, man. You should see these charts pop, man. It's amazing.
Looking forward to it.
It's a beautiful thing. And listen, folks, if you haven't test drove the Think or Swim platform, test drive it right now. The way you do it, you go to TFNN. You can see the banner across the top and the side. Hit that banner. You can bring it up. They'll put a paper money into your account. You can test drive it. I use that platform each and every day, whether I'm trading options, equities, futures, and commodities. It's all in one platform, dynamite platform. You know, Chad, we're coming into the, of course, you know, the end of the year. Hard to believe, man. Isn't it? Yeah, I know, man. It's really sick. And we get a flat market. You know, so it's intriguing that, bottom line, S&Ps haven't moved in 5 days. And the VIX is a little bit higher. It's like, so wouldn't like what, people putting a little protection on for the end of the year?
Yeah, it could be. I think a lot of it had to do with the Nike, the big drop with the Nike. So we'll see how it performs overnight. Huge.
Oh, that's right, folks. The Nike dropped 2.9% last night. That was a big move, man.
Big move down. Oh. So we kind of thought the S&P was going to follow along with that, but it didn't with the good earnings we had from all the retails last week and then the good retail numbers on Friday. So we'll see how this pans out.
Yeah. And, of course, we got Thanksgiving coming up. You got the holidays coming up. We have the weekly options versus the monthly options. Now, the weekly options continue to grow, right?
Yeah. So the volume on the weekly options are expanding every week. You kind of notice that if you're looking at the weekly options. A lot more liquidity in those weekly options than there was even 6 months ago.
Yeah. You know, it's amazing. You saw the news of the day, folks. Okay, happens to be allergen, and it's pretty amazing that Ackerman, who's a big fun guy, Bill Ackerman. The bottom line is that he put a position on, and it was very, this was really unique, wasn't it, Chad? I mean, how he came after what the position was, folks, is this, is that Ackerman got together with Valiant, and Valiant wanted to take over Allergen. But this was unique in the aspect that first you had a fund manager getting together with the CEO of a public company, and the fund manager went in the option market and bought 9.9% of Allergen and options.
A huge trade.
Oh, my God, man. You talk about a trade. You live and dream for something like this, folks. Make a long story short, guess what, folks? He put up $3.3 billion and got $6 billion back. And he lost. And he lost. That's the thing that's... He didn't lose the trade, of course, okay, but he didn't get the acquisition that he wanted, but someone else came into it.
Right. That's something to show with options. So even if you're wrong, you can still be a winner.
Isn't it, man? I mean, and this is incredible. So watch this. This is just so you can wrap your head around this a little too, folks, okay, is that when he first went into Allergen, okay, Allergen was priced out, I think, at $119. And I know, $133. That's what it's priced out at. April 17th, that's when he put the position on. Bottom line, what do you have? You have a stock that's at $211, I think. $219. 6 months later. And, you know, that would be a customer you want, right?
Yeah, for sure.
My God, that guy's really bright, though, man. I mean, it's just amazing how he did it, because, of course, he still had defined risk. And he went out like about a year and a half, I believe. You know, he went out a long way. So when we're looking at the option market going into the end of the year, are there any special things that folks like to do?
It really depends on their bias. So a lot of people covering positions, and now a whole lot of trading goes on towards the end of the year just because it is the holidays. Markets are closed sporadically throughout there. But what we have noticed is people are putting on really big positions on companies that have dividends or paying dividends.
Okay.
So buying some calls, then exercising those calls to collect the dividend, selling some puts against those.
Nice.
Buying puts against those. So see stuff around the dividend plays, but there's not a whole lot going on this time of year.
Well, listen, folks, tomorrow, 12 to 1 Eastern Standard Time, right here. And no matter where you are, folks, you can pick it right up in your cell phone, tfnn.mobi or tfnn.com. Hit the Tiger TV button on the top right, and as I just said, we're pure HD right now. You're going to see, you know, the folks always, came out really clear. The charts, because charts are so small, you're going to be in shock that they're crisp, they're clear, like in an extraordinary way. So, hey, Chad, hey, listen, what's the weather like in Chicago right now?
It's snowing right now.
Oh my God!
I could use a nice little trip down to you.
Come on down, man. We got 2 beautiful TV studios here. You can be right out of them. We're hooked right in. We got plenty of computers for you. It's a beautiful thing, man.
Might take you up.
They do that. Get your wife, get her on the plane, come down here. We get plenty of offices. You can work there. You can work down here just as easy, no doubt, man.
I'm sure.
Cooking, brother.
Have a good one.
We look for the show tomorrow. Okay.
Thanks.
Have a great one, man. Have a safe one. And that show, folks, 12 to 1 Eastern Standard Time. And the uniqueness of TD Ameritrade Thinkorswim goes like this, folks. They explain the strategies inside the option market for you and make it very easy to understand the strategies. Strategies inside the option market are crucial, folks. You're not just buying a call or buying a put, putting it on red or putting it on a green. Bottom line, you can protect positions, you can build positions on downdrafts on the way down. Guess what? You like the gold market? Well, guess what you can do? That market has been down in a dramatic way. You think it's going to go a little bit lower? You want to get something, and you want to buy the stock. You want to, if you're doing this type of strategy that I'm going to talk about right now, you have to make sure you want to buy the stock. What would end up happening there? Like, you want to buy a stock, you could basically sell a put. And what would end up happening at that particular point is that you collect the premium. If it gets down to where you sold it, you buy the stock. What does that mean? You bought it at a cheaper price. That's the first part. Second part, what ends up happening, it doesn't get down there, you still get to keep the premium. So there's a lot of different things you can do with options, but you want to make sure that you set up strategies and you're just not going green or red. That's what it really, comes down to. Particularly on the weekly basis, yeah, that's a whole different ballgame. Because of the fact that on the weeklies, what you are doing is that you're saying, you have a defined risk in all of them, but on the weeklies in particular, like right now, the Qs are trading at 102.91. You can take that either way you want, meaning whether you want to go bullish or you want to go bearish. And if you basically are going, let's say if you're going, let's see, here, I'll give you one right now. So if you're going bullish, guess what? You can do a 102 instead of putting up $100,000, you're putting up 1,000. You own the same amount. If you're bearish, you're putting up 102. Yeah, you put up you're buying a 102. If you're buying a 102, that's even, 103 it would be 54 cents. So you're putting up $540. That's defined risk, folks. That's how that works. Of course, now what does happen is those premiums each and every day, that's the premiums themselves, okay, they lose value every day. So you need a market, you want a market that is moving. We'll see what type of movement we get out here this week. If we do go over to the Nikkei, Chad just brought up the Nikkei. This was a big move in the Nikkei. Nikkei last night comes down at 2.9%. Came down with some real juice, and this was after gapping higher. Nikkei came down $500. We'll see how it gets into, we're at 16,900. We'll see how it gets into 16,500. Nikkei on a longer-term basis still wants a lot higher price. This is a normal retracement in a market that has been going up. That's what it comes down to. And what's that's all about? That's all about the yen, folks. The yen's the yen's trading at 116. The yen has come off the bottom of 72, 75. We're at 116 right now. It's making its way up to 124, and I expect you're going to see 135, 6 months, 8 months, whatever that is. That movement inside the yen, you got to remember that the yen itself, it's hard to believe that these companies in Japan could ever even stay in business. The yen had traded at $357 per $1. That was in 71. And then it goes all the way down to $77 in 2011. That's the strongest. That's insane how strong it got. And they stayed in business. So bottom line, you're going to see weaker yen. Nikkei's a regular pullback in a market that still wants to go higher. This is Tom O'Brien. This is TFNN. Dow Industrials finished up 13. NASDAQ down 17. S&P's up $1.50. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials finished up 13, NASDAQ down 17, S&P's up $1.50. Let's go to Victor in Stoughton, Mass. Hey, Victor, what's going on?
Not much. Tom, before I say anything, I want to thank you for the good call on bond market. You were the only person saying bonds will drop.
I appreciate it, man. It's listen, it's hard to believe. I know it is. It's like crazy.
No, you were right on the target compared to the other person who worked in your organization long time back. I don't want to mention his name.
No, that's all right. Larry's going to have to go on. Me and Larry have a running joke, folks, okay? And the bottom line is that he's so scared of boats. And I had him down, and him and his wife were at my house in Florida. And I got him on the boat, and he was so scared it was unbelievable. And so the running joke is that he has to get on the boat again. So we're going to get him on the boat again.
Yes, no, you were right. I don't think there was anybody else who predicted this so precisely as you did.
Yeah,
well, got your people in at 3% and got out at 1.87.
Oh, good for you, man. That's a
I cannot. Nobody can be so precise.
That's a beautiful thing, man. Listen, you know what's so crazy? This is what the thing that's amazing about this bond deal, folks, is that bonds run the world. So it's like, okay, so where are we going now? And you know, the consensus is like, okay, bonds supposed to go up, meaning, you know, are down in price, up in yield, you know, because the Fed's supposed to go up on price. It's like, until the rates go up across the world, I just don't see it, because I don't see why anyone should, you know, give money to France at 1.1% or, you know, Italy at 2.3 when we're 2.3. You know what I mean?
Correct. Yes, you're right. You're absolutely right.
Well, listen, man, I appreciate it. You want to look at Lowe's?
Yes.
Okay, so let's take a look. You got Lowe's Companies, that's the Home Improvement Center. The low's 44, the high's 59.16. That's today. They pay a 1.5% dividend. Now, do you own this? You looking to buy it? What are we doing?
Looking to buy it.
Okay, so just take it. I would wait for a pullback. This is what's going on. The setup, it's just finished a nice structure getting up to the $55 level. That's what this was doing, okay? And I think you have to wait for a pullback. I mean, you're at 58. I'd wait somewhere around 53, you know?
Right.
You know, it's just it's extended. And, you know, it's extended. And these want to go further on a longer-term basis, but I wouldn't get caught up, you know, when we get a decent pullback, that's when you want to get into it. 51 to 53, and where you're going, Victor, is this, is that I'm bringing this November 22nd, which is 51.85. That's good volume. That's 64 million. Then you can go right back to February. That's 51.28. That's 53 million. That should hold there, you know, and that would be where you could get in, because it's possible that this may be a large ABC structure on the way up. And that'll be another 25 bucks on top. It'll be like a 45, 55, 65. Yeah, 70 bucks. That's where that would be. But let it pull back first, man.
Okay. All right. Thank you very much.
Okay. Have a great one, man. Have a safe one. And see, what you will see, now this gets intriguing, folks, okay, because what you'll see with you won't see it so much this quarter, but you'll see it next quarter with the Lowe's, with the Home Depot. Realistically, what you'll probably see is this, is that the suppliers in the South, their stores in the South will continue to do business, because what ends up happening is that, you know, we have that real estate company. We do a lot of business. We do a lot of houses over. Nothing stops us because our weather is great down here, folks, okay? If anything stops us in the middle of the summer, when it gets so hot, you know, maybe a couple hours you pull back a little. But we don't stop in the winter. What does happen, though, is that folks in the Midwest, folks up north, well, you got to slow down in the winter. You can't buy as much because you can't do as much construction. And you can't do houses over as much. You can't do all the above. So if you're looking to get into any of those businesses that make money off the real estate coming back, and particularly because those Home Depots of the world, the Lowe's of the world, what you absolutely have there, is that they hadn't been done in so long that there's a bent-up demand to get a lot of places done. And that's, I'd say, right across the country. So what you'll see in the middle of the winter there, you'll see those numbers slow down, and that's when like you can get a pullback that's happening. If you haven't watched Tiger TV, folks, check it out at TFNN.com. We went all digital this morning. I do want to thank my whole crew at TFNN. They did a great job. If you haven't watched the charts at Tiger TV, they're absolutely phenomenal. And we will be, when we're interviewing folks, we're going to be bringing some folks in by Skype. You know, and you'll actually see a couple of us simultaneously up on Tiger TV. And I do really appreciate all you Tigers and Tigresses growling and prowling with us out here, because we couldn't do a thing without all you folks' support. And we really do appreciate it. As you're over at TFNN, you're going to see our man, Mr. Steve Rhodes. He is doing a 7-week training program. It's going to be an outstanding program. What that's all about is this. You have a webinar coming this Saturday, 6 weeks of follow-through, then another webinar. So we're talking 2 separate webinars, 3 hours apiece. The first one's going to be this Saturday morning from 9 o'clock till 12 o'clock. He's going to go through all the rules, and when he's talking about the patterns that he's looking at, what the triggers should be on the trades, what the momentum pattern should be like. Then he's going to follow that through for 6 weeks. Then he's going to do an additional webinar that's going to be live when the markets are open on January 9th. All of that, folks, are only $395. Check it out on the front page of TFNN.com. And, of course, don't forget, at TFNN, live programming, 8 o'clock in the morning to 6 o'clock in the evening, every trading day. We then take that programming and we play it 24 hours a day. Over in Asia tonight, Nikkei got hit last night in a big way. I expect you'll see a lower Nikkei out here tonight. Not dramatically. I don't see another 3 or 4% down. We were down $500 last night. She can go fill that gap. That gap is about, that gap is another 300 down. The gap in the Nikkei is 16,533. You're at 973 right now. The key out here tomorrow morning is going to be this dollar index, folks. Dollar index failed on price and volume last Friday. Today, rejected lower price, was up 437 ticks. However, that being the case, the S&P couldn't move higher, and it didn't whack gold or silver. That's very unusual. That's saying you have divergence number one. It will get straightened out. It looks to me that the dollar will go lower. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking up right here tomorrow. Wow! Go get them, folks.